Weakening rupee against the dollar. The rupee has dropped 12 paise to an all-time low of 85.06 against the US dollar in the early trade, as hawkish, in fact, tilt from the US Federal Reserve sparked a broad dollar rally. This decline comes after the United States Federal Reserve cut key interest rates by 25 basis points and signaled fewer rate cuts in 2025, signaling a more cautious monetary policy stance and pressuring emerging markets currencies, including the Indian rupee. Now, the rupee's decline is not an isolated event. All other Asian currencies also, in fact, weakened during the day. The Korean in fact, a Malaysian currency, and along with the Indonesian Rupiah also, in fact, fell from 0.8 to 1.2% during the day. Sakshi Bajaj explains more details.
Global markets plunged in trade today, following the US Federal Reserve's outlook, projecting only 2 rate cuts in 2025 and not the 4 rate cuts projected earlier. The Dow posted its longest losing streak since 1974. Asian markets tumbled sharply, and the Nifty and the Sensex declined by over 1% each. The Indian rupee also weakened to an all-time low of 85 rupees to the dollar.
What are investors and analysts alike reacting to? Well, they're reacting to the Fed's outlook. The Fed's outlook of just 2 rate cuts in 2025 as compared to 4 rate cuts projected earlier in September. That really is significant, as the Fed is saying that, look, they are estimating and anticipating at the moment that inflation will remain stubborn and above that target range for longer than anticipated.
The spotlight now is on what will US President-elect Donald Trump's key priorities be as soon as he assumes duties in office, especially after reportedly reiterating his intention of imposing reciprocal taxes on India. Sakshi Bajaj for NDTV.
Let's go across to my colleague Alex Matthew, who's joining us with more details and the implications of this downfall of the rupee.
The big headline in the financial world this morning is that the rupee has breached 85 against the dollar for the first time in its history. It is at a record low, and at this juncture, it has fallen about 2.2% against the dollar in 2024. It is a big headline, of course, but the context is important to understand as well. And that context is that the dollar index, which measures the strength of the dollar against a raft of currencies, itself has risen about 2.5% in 2024. Overnight, the dollar index gained strength because of what the Fed said in the outcome of its meeting. Of course, it cut rates by 0.25 percentage points, but it indicated that it will likely go slow in the new year as far as rate cuts are concerned. That had a bearing on all markets across the board, and the dollar, as I said, gained strength. The Reserve Bank of India has been intervening periodically over the course of the last few months and trying to maintain a little bit of stability in the foreign exchange, as a result of which you've had the rupee more or less hold strong, while a lot of other currencies around the world have actually lost ground against the US dollar. Going forward, of course, what you need to understand is the implication. For importers, a weaker dollar is not a good thing, and it's a major issue for India because of the crude imports that we have in our country, and also gold imports. That's something that we've seen a rise in the recent past. Of course, that is another story altogether, with the latest data being questioned. But it's positive from the perspective of the exporters. They will be cheering to a certain extent, and that can have an impact in the third quarter of this current financial year. I'm talking about the December quarter, as well as in the first and the second quarter of the new calendar year, that is next year. So that should give you a little bit of perspective on what has happened about the rupee. Of course, equity markets are bearing the brunt of the Fed's decision as well.
All right. So it leaves us with some important questions, and we'll discuss those questions. So what are the big questions that we'll be discussing, in just a short while from now with our experts? What triggered rupee's dive to a record low at 85.06 at this moment? And also, what we'll be talking about will be how will the emerging markets like India, how can these markets rebound? And then we'll also talk about how can India get back on track for 7.2% growth rate. Joining me now to discuss these issues at this moment, Professor Arun Kumar, Senior Economist. He's with us at this moment, and Professor Santosh Mehrotra, Senior Economist, Visiting Professor, Center for Development, University of Bath, United Kingdom. Thank you so much, gentlemen, for being with us at this moment. Professor Kumar, I want to start by asking you, rupee we have seen that continuously there has been decline as far as the strength of the rupee is concerned. Now with the Fed's announcements, it has taken the lowest tumble so far at 85.06. What is the short and the long-term outlook that you are in fact seeing as far as the rupee is concerned?
I'm not able to hear you clearly, but from what I understand, what you're asking is that what is going on regarding the short run and the long run.
Yeah.
What I can make out is that you see with the election of President Trump as the president of the US, there is a huge uncertainty in the global situation and therefore for India. Whenever there's uncertainty, what tends to happen is that people shift towards dollar and towards gold. That's what seems to be happening, and the Fed is reflecting that uncertainty by reducing the interest rate by 0.25%, but giving the advisory that next year it will not cut as much. So it's signaled to the market that there is going to be a huge uncertainty till Trump takes over as the president of the United States. That's the external part. The internal part is that we've had a huge trade deficit. Imports have shot up, the exports have declined, and therefore, these two together are signaling that the rupee will decline further. Also, because the rate of growth has declined, so I think people's confidence that Indian economy is doing well, that has been, somewhat dampened. Also, going forward, the employment situation is not very good in the country. And what happens is that, because of the unorganized sector not doing so well, the unorganized sector, which employs 94% of the workforce, that actually is the problem. So in other words, the internal instability and the internal, problem coupled with the external instability globally, these two together, I think, are what underlie the decline of the rupee and the decline of the stock markets in India.
Right.
So I think, yeah.
Professor Santosh Mehrotra, how can India, in fact, at this moment, because like Professor Kumar was explaining, it's a combination of factors, external and internal. Not much can be done with what is happening, over our shores. But within India, what is it that the government, in fact, can do to safeguard and make sure that the economy is on the right track?
Let's face it, the rupee has actually appreciated, and it's a good thing that the rupee is now depreciating. Let me explain. India's exports, as Professor Arun rightly just said, have not been growing, and one very important reason why exports have not been growing and imports have been growing is that we have our inflation rate is relatively higher than that of our competitors, and we have the RBI has unfortunately intervened far too much in the foreign exchange market. It has kept the rupee stronger than it needs to be or deserves to be. If you look, you see, what is the most important indicator for the purposes of India's export? The most important indicator is the real effective exchange rate. The real effective exchange rate, or the RER, in India's case has been appreciating because our rupee has been, our inflation rate has been relatively high, while the inflation rate in other countries has been falling. So we must not in India take a nationalistic, patriotic kind of view about the rupee's fall. The real effective exchange rate must remain stable, and it should slightly depreciate, and it should depreciate slowly because of our inflation rate. Please remember that our exports were growing at a strong pace from 2004 to 2014 because the real effective exchange rate was constant. On the other hand, in the last 10 years, we've allowed, the RBI has kept on intervening, and therefore we've allowed our rupee to appreciate. And that's not a good thing, because that encourages imports, as has been happening, and it discourages exports.
Right.
So it's just as well that on the Indian side, we don't do very much. We just watch the market, and the RBI would be well advised to keep off, because it has been actually intervening a lot. It has been intervening not just in the spot market.
Okay.
It's been intervening in the forwards market, and so, and it's been hiding all the activities in its forward market. And
Right.
that's a problem.
Right.
Because those are settled in dollars. Please
Okay.
appreciate that. Yeah.
Professor Arun Kumar, a lot of people, those who would be watching, both in India and abroad, there is a sense of, panic in the short-term investors. What would be your advice to people, those who are invested, in the Indian stock market, which saw massive growth and now a period of decline? Professor Kumar, can you hear me, sir?
Hello, I can't hear.
We'll try and fix that. We'll just try and fix that. Professor
let me
Mehrotra, if you
answer
could
that.
take that.
Yeah, I can take that. You see, it's just, what will happen is that if the rupee does depreciate, obviously foreign investors are likely to be encouraged to remain in the Indian market, and the Indian stock market will not fall as much as it has been falling, despite the fact that the US Fed has decided to keep its interest rate down to only two reductions rather than more reductions of its interest rate in the year 2025. So as long as the dollar fetches more rupees, there is no particular reason why dollars will not flow in from the foreign portfolio investors. So that will tend to stabilize the market. That's point one. Point two, we have to remember, is that 2 million odd domestic retail investors are joining India's stock market every month. That's been happening. And the number of domestic investors, retail investors, not just the domestic institutional investors, have held the Indian stock market up. So I don't see much ground for panic here. These kind of ups and downs are likely to happen in the stock market. As it is, the stock market's doing rather well, much better than the economy is doing.
Absolutely,
Right?
yes.
Because there are real issues about the fundamentals of India's economy. In the last 10 years, the growth rate of the economy, even by the government's own estimates, and those are not all very kosher, as both Professor Arun and I would agree. By its own estimate, it's 5.8%. In the preceding 10 years, the growth rate had been 7.8%. So there's already, we know that the government admits to a 2 percentage point lower growth rate.
Right.
So look, the point is that the growth rate is, all international agencies have been saying for some time, whether it's the World Bank, the IMF, the OECD, that India is not going to be growing in the 2020s until 2030 at anything more than 6.5, 6.7%. So this 8.4 that happened in the previous quarter was already the peak. And if you see what's been happening to the growth rate, as the government or the CSO is telling us,
right?
You look at every quarter from the last quarter of the financial year 23, every quarter it has fallen. 5.4 is the outcome in the most recent quarter.
So no need to panic. This is just volatility. I mean, if you are a long-term investor, just sit tight. And in fact, it is not going to impact you as much. Don't panic at this moment or take any decision. Thank you so much.